Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod. Big news for the news. Comcast to spin off its cable networks, which include us.
CNBC, yours truly, ours truly.
What we're expecting and what shareholders can expect.
What should the name be? I just ask AI. They all suck.
With the man who started it all, one of CNBC's founders and our first president, Tom Rogers.
My first thought was the kids are going to be all right.
And another historic brand, Delta, about to turn 100. CEO Ed Bastian speaking to investors about consumer spending and taking a pause from Boeing while new leadership there irons out the kinks.
He's spending time with his big customers in that regard, letting them know, keeping them posted, which I appreciate. Right now, we're an Airbus customer, though.
Plus, you don't want to miss our interview with Kansas City Chiefs president Mark Donovan. His team is in its Hallmark era, thanks in part to T-Swift. Two fandoms collide on the holiday movie channel beloved by all.
Taylor Swift is an authentic member of the Kansas City Chiefs kingdom. She's an authentic fan.
It's Wednesday, November 20th. Squawk Pod begins right now. First up today on the podcast, we're in the news. Comcast, the parent company of CNBC and NBC Universal, is moving forward with a plan to spin off its cable networks. Channels like USA, E, MSNBC, and, CNBC. The NBC network, Bravo, and streamer Peacock will all stay under the Comcast umbrella after this spinoff, which is set to take about a year to figure out. Now, Comcast executives had floated this idea a few weeks back in the earnings conference call, building a new, quote, well-capitalized company that would be publicly traded and made up of, again, I quote, our strong portfolio of cable networks. The combined properties of this new entity, us, cable networks, and some other digital assets, generated approximately $7 billion in revenue in the 12 months ending September 30th. The television portfolio of NBC was years in the making, but cord cutting continues to have significant financial impact on the TV business. Comcast lost 365,000 TV customers during the third quarter. So, we'll see what the future holds for brands like ours. CNBC is 35 years old and was the pioneer for the Peacock's diversification into cable. And now, we're about to embark on a new adventure. As always, Squawk Box is anchored by Joe Kernen, Becky Quick, and Andrew Ross Sorkin. Joe Kernen takes things from here.
Let's bring in Tom Rogers. He's executive chairman of Orbit Gaming, former NBC Cable president, and a CNBC contributor. Tom, thanks for joining us. I would imagine as someone who had the foresight to found the network and has watched, and we always have you on to talk about the state of the industry, you probably understand this move, and I would imagine you're in favor of it or think it's a good idea.
I actually do think it's a good idea. I think of a couple of these channels as my babies, and my first thought was the kids are going to be all right. I think this is a very good move in terms of being able to create an entity where CNBC and MSNBC, for example, can get the kind of resources they need to expand their franchises, really put them in a position to exploit the opportunity of the streaming world. I think within Comcast, it's been pretty clear that these channels have been treated just as cable channels and really haven't had an opportunity to get the resources to spread their wings as broad media franchises that can go way beyond the constraints of today's cable bundle. And getting those resources creates opportunity for employees, creates opportunity to be much more creative, I think, in terms of how you could imagine specialized business streaming services that are supported not by the household pocketbook as any channels within the cable bundle are today, but support from corporations and investors who really could rely on more vertically oriented specialized services and a whole new level of revenue streams. So I don't look at this as a way for Comcast to simply dump problem assets because the cable bundle is continuing to face cord cutting. I look at it much more as an opportunity for some really strong media franchises to be able to broaden themselves.
Yeah, thanks, Tom. A problem child is not something I was hoping you would call us.
He said the kids are going to be okay.
The kids are going to be
That's
okay,
all right.
even the problem child. No. So Comcast, the first mover on this. I mean, they're not alone. I mean, this is facing the entire industry. What gives Comcast the ability to do? They are in a better position, I think, to be able to do this, probably.
Well, I think they can do it in a way that creates a healthy spinoff. Other companies are heavily burdened by debt. And while I do think this creates a vehicle that will allow others to potentially take assets and put it in there, I think Comcast will be very resistant to burdening this with a lot of debt. So the fact that it can be capitalized in a healthy way to really give these franchises, not only on the news side, but the entertainment side as well, and an opportunity to drive things that they haven't. When you're competing for resources against the Olympics, against Peacock, against the NBA, it's really hard for these channels in this kind of environment to get the kind of priority attention that they could get to expand and grow them. And I think others may find this an attractive vehicle, but I think Comcast, given its much more healthy balance sheet, will be in a position to set this off in a way that is financially strong.
Yeah, Tom, I think if you look at this, the Wall Street Journal today reporting that Brian Roberts would maintain a one-third voting control in the company, and that's a vote of confidence. This is not something that's being spun off to private equity to say, good luck, fix it up. I mean, that sounds like exactly what you were just talking about, the idea that these will be companies that will be invested in, and that's one way to read it.
Oh, absolutely. Obviously, Brian will be heavily incented to see this thing financially succeed. But putting Mark Lazarus in charge of this, a guy who has cable in his bones, and was actually one of the early employees of NBC Cable back in the day when the whole division was being formed. And I think that it's a show of confidence that somebody of his merit is being put to drive this. I think Mark will need to put in place here a couple of really strong business development executives so this thing can sprout new opportunities and grow. And with that, I think it can really succeed.
So, Tom, here's my question. I'm going to put you on that development team for a second, and I'm going to give you a couple $1 billion, maybe $1 billion a year, for you to invest. You can acquire assets. You can invest in the business, the core business. You can acqui-hire other people. You can buy cable. You could buy linear. You could buy internet companies. You could buy gaming companies. You could buy sports licenses if you think there's any even available. Of course, that wouldn't be in the sort of NBA or
pickleball.
No, but it might be.
No.
But with $1 billion.
No, it might be. But here's the question. Assuming that your business is losing, name your number, $100 million a year, whatever the number is going to be, you need to obviously buy businesses or create businesses or develop businesses that are going to grow to make up for that number every year to turn this into a growth business. So my question is, what kind of businesses would you buy?
Well, first you got to start with the fact that these businesses are profitable today, very substantial revenue. They have distribution agreements in place, and I don't think that they have any major distribution agreements coming up near term. Obviously, Comcast can put in place through its cable division a very long-term arrangement. And I think there's a lot of organic growth opportunity without acquisition or merger that comes from some of these franchises. I think, as I mentioned, I think CNBC has a long road of opportunity to drive itself into the streaming world in a way that it is not today. I think that MSNBC, for much of the last couple of years, was the second most popular cable network of all on an all-day ratings basis. And so, these channels have leverage in their own right, even though they lose the leverage of long-term of being tied to the Olympics, NBA, and all. But to answer your question,
by the way, just so you know, my understanding of it is that the Olympics are actually still going to be tied to channels like USA and some of the other things through 32. That's actually part of the license. So even though there's a split, you will have Olympics and some other sports that you might not be thinking about.
I am sure there are all kinds of contractual and licensing arrangements which we'll put in place that will maintain some of the synergies, and that in and of itself gives enormous leverage to the spinoff for distribution purposes. But channels like Sci-Fi, which is a broad entertainment niche that has massive following in terms of where that might go. Golf, obviously, huge following. These are all areas that can be exploited in terms of investment, and whether you're acquiring assets that are anywhere from print to streaming assets to things that are developed from existing programs, that now the opportunities for the broader relationships with the entertainment world beyond Peacock, beyond the NBCU family, opens up a slew of opportunities. This is what a business development exercise is about. Get a well-capitalized company with broad franchises that have leadership positions today, and figure out how to get them out of their current constraints of being cable only plays. And I think the sky's the limit. I couldn't prioritize for you today where I'd put that money, but once people are unleashed to be able to do it, there's plenty of opportunity in any of these areas.
What should the name be? I just ask AI. They all suck. I don't know. What do you think? A new code to start with, I guess that's what it's always called. Wave Rider Networks? Wave Rider, Quantum Connections, Next Gen Cable. That's taken, isn't it? You got Fiber Flow Network. You got anything for me?
It will be a lot easier to name than the issues we had when we started CNBC, which was the first of the cable channels in the NBC family. The notion that we were using NBC when the broadcast affiliates figured that was sacrilegious to actually allow the name NBC to be used in a cable context. We couldn't use the Peacock on that network because of that distance for a long time.
I remember that. And then Bolster brought it back. Brought it back and said, why? Remember? He said, why do we not have the Peacock on our logo? We had some screwy little Nike. You remember it? It was 25.
We had
it was
tons
horrible.
Of those issues, and today, through licensing and through the opportunities to grow this thing, it'll be a hell of a lot easier than it was then. So just think of the history of what it took to get a broadcast network.
I don't like this. Cable Master Solutions. I want to be a master of cable. I think we should, but I think we need to drop cable completely. I don't know. It's toxic. All right, Tom Rogers. We have a lot of history together, obviously. Decades.
Decades.
Yeah, I know. All right. Thanks, Tom.
35 years.
35 and counting. Headed for 50. All right.
Cheese will be next.
Coming up next on Squawk Pod, major retailers might be seeing inflation-conscious consumers, but mid to high-income spenders still have the travel bug. Delta CEO Ed Bastian says passengers are spending on trips.
Their number one priority for spending is not going to Target, it's not going to Walmart, it's going someplace. It's the experience economy, and the experience economy continues.
Ed Bastian joins us ahead of Delta's 100th anniversary and the company's annual Investor Day. That's right after this. This is Squawk Pod.
Stand Andrew by in 3, 2, 1, up and Andrew, cue.
You're watching Squawk Box on CNBC. I'm Andrew Sorkin along with Joe Kernen and Becky Quick. It's ahead of its Investor Day. Delta Airlines affirming its fourth quarter guidance. Phil LeBeau joins us now at the table with a very special guest.
Ed Bastian, CEO of Delta, and you guys are going to be laying this out for investors later today, but we got a preview yesterday, and you just made the announcement a few minutes ago. The release went out. you're looking at, over the next 3 years, some sustained, durable, higher profits on a regular basis. How do you get there?
Well, the themes for the Investor Day today are two. They're differentiation, Delta's continued investment in the quality of the service, the reliability of the service, the experience, and durability, so that investors know what they can count on. And we'll get back to those later. But when you think about that, one of the big risks that this industry has always faced is that there has never been an airline that can truly say it's financially durable.
Well, and you know that that's the knock. We talk with people on Wall Street, they say, yeah, these airlines go through a period where they're really good trading stocks. Yep. Stay away from them as long-term investments. You know that. Warren Buffett has said that for years. Yeah. Why should people believe it's different now? Well,
when you look at what progress we've made over the last 15 years, the investment in quality, the investment in service levels, the investment in not just the experience for our customers, but actually experience for our owners, the free cash that we're throwing off, that's what's different. We're projecting over the next 3 to 5 years that we're going to generate $50 billion of operating cash over that period of time. 50% of that's going to go back into the product, $25 billion over that period.
Yep.
The other $25 billion is going to get a balance sheet that's pristine, that is going to be a fortress balance sheet with potentially on the back end of that excess cash that we could potentially use for our shareholders if we needed to.
This has been a challenging year, whether it's the excess capacity in the industry, which has been weighing on everybody's results, your results in the first half of the year. There was the CrowdStrike situation, outage, and the lawsuit. What have you learned the most from all of this year?
Well, it's about resiliency and durability. One of the things that I'm most impressed with as we close the year, and we're closing the year strong, is that despite all those things, our profits year over year are continue to lead the industry, and they're relatively flat on a year-over-year basis, anticipating some pretty significant growth going into the new year. And the overall experience that our customers are feeling are saying that Delta is the premium brand in the industry, and they're continuing to fly Delta.
Hey, Ed, can you just shed a little light on the consumer? Because we heard from Target just a little bit ago, and their numbers were far below what the street was expecting. Part of that was higher cost, but part of it was also them saying that they are seeing a consumer that is still on a budget, that is still very choosy about what they're going to spend on. Discretionary was a big issue for that. And Walmart, even though they had really strong numbers yesterday, did say that when it comes to some of the discretionary spending, they are seeing a consumer that is still pretty choicey, pretty concerned about costs. What do you see from the
Our consumer is defined as households with $100,000 or more of annual earnings. Mm-hmm. That's 40% of the households in our country. That cohort, just in the last 12 months, has accumulated an incremental $10 trillion of wealth over this period of time, and that their overall wealth has grown 40% since the pandemic. So that's the consumer that we're targeting. That's the consumer that's flying today. It's over 90% of the revenue base that's generated at Delta. And their number one priority for spending is not going to Target, it's not going to Walmart, it's going someplace. It's the experience economy. And the experience economy continues to be really strong. And whether that's internationally, whether that's for business, whether that's for trying to continue to find new places and new experiences to bring their friends on, that's what we're leaning into, and we see no end in sight to that.
But on the lower end, Spirit is in bankruptcy. Frontier is trying to pivot to a bit, to go a little more upscale. But the low-cost business model for airlines, is it dead for good, in your opinion?
Well, it's challenged right now. And one of the reasons it's challenged is that airlines like Delta have products also catering to fares that are for price-sensitive levels, not a significant part of our inventory. And consumers are choosing Delta for the value that we create.
But doesn't that create an opportunity in that market right there? I mean, that's not your concern because your market is the over 100,000. I want the premium experience. I want the Delta brand. I'm going to pay up. There's a lot of people under 100,000 in the U.S.
Right. And there's no question that there was more capacity chasing that segment of the market than was necessary. And we saw it this summer. And so you see every airline that's in that segment is cutting back. And whether it's through bankruptcy or court ordered or Southwest making their changes, that whole half of the segment, that's not our target. That segment is under a lot of duress, and it'll get restructured and sorted out, but it's going to take some time.
How do you feel about what you're seeing at Boeing right now?
Well, we're waiting for the news on the MAX 10. I think it's going to be some time before we hear about that.
Does Kelly Ortberg at some point need to say, here's my plan? Aside from what he has said so far, which has been, we will get back to blocking and tackling and building the airplanes the correct way? Does he need to put out some concrete measurements in terms of what we expect to do in the next few years?
I think he's doing that. I think he's spending time with his big customers in that regard, letting them know, keeping them posted, which I appreciate. Right now, we're an Airbus customer, though.
Wow. Airbus customer, that hurts, but what are you going to do?
Well, if we had been tied to Boeing,
I know.
right?
I know.
I mean, we'd
I have maybe a broader philosophical question. Do you think that we should have had more competition for major airline manufacturers in the U.S.? Would have that created a different dynamic? That's
hard
been
to
something
build
that's
those things.
been talked about. I mean, we sort of got into this sort of us versus them situation. I don't know if that advantaged us in the end, or if actually it created some of these problems because there really was only one competitor. I don't know.
Well, there's no question we'd prefer more options and more competition, and I think that lack of competition was one of the reasons why when the final story on Boeing is told, that caused a lot of the being on their back heels,
right.
Somewhat. At the same time, the cost to building these enterprises, these planes, the investment that's required, the cost for the airlines to take a third product in is massive. The amount of new pilots you'd have
You
to
still
train.
fly Canadair, don't you? And some Embraer and stuff like that.
We have Embraers, but that's in our regional
That's what I mean.
space. But they're not. And if they moved into the
great
mainline
jets.
space, it's a significant
it is.
Training
So
issue.
Citations, and it just wheels up, I guess.
that's it, wheels up. But this is a long cycle, highly capital intensive business,
Right.
and we need Boeing to get fixed. I mean, there's not an option there, and Kelly's on the case, and glad to see him there, but it's going to take a long time before they get anywhere back to where they were.
Ed, can you talk a little bit about CrowdStrike and where the legal action that you are seeking from them? I think it's $500 million you're seeking because you felt like you were really left hanging out to dry when they had big issues too. Where does that stand? Have you been in talks with CrowdStrike? Or?
Well, we filed litigation several weeks ago, and it's in the lawyers' hands right now. And they apologized. They said they were sorry, but candidly, that doesn't do a lot to the hundreds of thousands of people that were impacted in our business, our people as well as our customers.
Have they reached out for potential settlement talks yet?
We had conversations, but when you get into the scale of how we were impacted, unfortunately the lawyers jumped in pretty quickly.
Ed, it's good to have you here.
Yeah, I'm excited.
Big investor day. Hey, guess who turns 100 next year? Not Ed,
Ed?
himself. Ed himself.
No, he looks great.
Delta.
We turn 100, and we're going to be launching our 100th year as the keynote for the Consumer Electronics Show in Vegas the first week in January, and I'm doing it from the Sphere.
That is crazy to think of an
Congratulations.
airline
That's
being
awesome.
100 years
Really
old.
is.
First U.S. airline to turn 100.
Wow.
That we've been flying for that long too.
Yeah, it's a great.
And they have a
it's gonna be
flight
awesome.
attendant who was hired by Howard Hughes.
Really?
I was told that yesterday. Is this true?
I just last week gave her 65th anniversary pin
Wow.
with Delta.
That's cool.
The oldest, the first person we've had that with 65 years of service. It was really cool.
Well, time flies when you're having fun.
It's a wonderful industry. We're going to have a great holiday period. The advanced bookings look really, really strong, and we're going to have a good day today with our investors.
Great. Good luck.
Thank you.
Thanks,
Appreciate
Ed.
it.
Thanks, Phil.
Next on Squawk Pod, NFL fandom takes the Hallmark channel, the Travis Kelce Taylor Swift love story, but make it holiday. Kansas City Chiefs president Mark Donovan says a new romance movie is for the brand, the channel, and the fans.
If you talk to the Hallmark folks today, it's put them in a different place, in terms of advertisers looking at this product on their station versus the typical Hallmark holiday movie.
You're listening to Squawk Pod from CNBC with Joe Kernen, Becky Quick, and Andrew Ross Sorkin. And a very special guest from the world of sports talking about a love story.
Stand Joe by in 3, 2, 1, shoot Joe.
Kansas City Chiefs partnering with Hallmark for a holiday movie this year, capitalizing on their new Taylor Swift fan base. Joining us now, I can't believe I'm reading this. Mark Donovan is the president of the Kansas City Chiefs. So your Taylor Swift fan base for the Kansas City Chiefs. Did you know this 2-3 years ago? Would you have predicted this? Did you
Not
write
on
this?
the bingo card.
I'd love to say that it was a marketing strategy, but it is an authentic relationship, and we're happy to have it, and it's been nothing but good for us. I think the best thing I can say about the whole relationship and what it's had, the impact it's had on us is Taylor Swift is an authentic member of the Kansas City Chiefs kingdom. She's an authentic fan, and that matters to our fans and our fan base, and it matters to us, and we've tried to respect that.
Well, having Mahomes probably was pretty good as well. And you know, Kelsey, not chopped liver either at this point. And the coach is like a TV star, and he's pretty good. He's pretty good. See where he goes after those. Give me the nuggets.
The nuggets, the nuggies.
Give me those nuggies. Yeah, exactly. So I don't know. I don't know. There's only one way for you to go from here, and that's down. From what I can tell, is it? What are a couple of years?
Our goal is to consistently compete for championships.
Well, how many do you want to win in a row?
As many as we possibly can.
As many as you possibly can.
I mean, look, we're on the verge. We have the opportunity to make history. And we've made a lot of history in our franchise over the last decade. But we have the opportunity to do something that's never been done in the National Football League. And I would say this about our team, and it's led by Andy Reid, it's led by our general manager, Brett Veach, and obviously the direction of Clark Hunt, our CEO. But first day of training camp, it was about the opportunity. It was about we're on a stage here that we earned because we won the first two in a row, and now we got to go take advantage of this. So it's very positive the way we're looking at this opportunity.
You want to talk about the movie?
I do.
Yep.
I'm kind of excited about this movie. I think you guys are going to lend some real cachet to Hallmark too with what this is. How did this come about?
Yeah, it's a really interesting story. So we actually, Kansas City is a special town, special place. And the Hall family, who started Hallmark, are a bastion of our community. So we actually went into last playoffs and said, our CMO, Laura Krug, came up with the idea and her team of, could we somehow own the playoffs?
So you guys are the ones who came up
We
with
did.
the idea.
So we did this promo. It was a fake movie promo, and we did it sort of honoring Hallmark. They didn't know anything about it. We didn't talk to them
You
about
didn't tell them about it.
We just
Yes.
did it.
And what'd they think of it?
We got a call a couple weeks later saying we should talk. and I joked with Laura after the promo that, you know, there's a chance that we could actually make a real movie here. And now November 30th, Holiday Touchdown, a Chiefs love story, will premiere on Hallmark Channel, and it gives us the opportunity to, as you said, expand our fan base, and they can expand theirs as well.
Is it seriously ripped from the headlines like all of the Dick Wolf things used to be, or is this just using it as a vehicle for telling a different story?
Yeah, if you looked at the promo from last year, which was Falling for Football, that was a different story. It's about fans. This one is a different version of that story, and it's really about fans. It's about fandom. It's about the unification of our fan base. And it does it in a very Hallmark-like way, celebrating the holidays. And it's a perfect combination of entertainment, pop culture, the power of the NFL, the power of our superstars. I mean, you got a Hallmark movie that has Donna Kelsey, Andy Reid, 4 of our active players.
So that's what I was going to ask about the budget for this film, because Hallmark has, one of the reasons it's done so well is it's actually typically limited the budget of its films. How did that work in this context?
Yeah, it's an interesting model for us. It was different for them. It was different for us. We worked with Skydance Sports, who has a partnership with the NFL, to make sure that we could distribute it correctly. And I think we all sort of had to expand our envelopes a little bit
Right.
on how we do this. But it gives us this amazing opportunity. And if you talk to the Hallmark folks today, it's put them in a different place, you know, in terms of advertisers looking at this product on their station versus the typical Hallmark holiday movie.
Is there any blowback to Taylor Swift endorsing Kamala Harris for president? Did that change the relationship at all?
Not that we've felt. I mean, you think about an NFL franchise and an NFL family and any team, you're going to have opinions on every end of the spectrum.
Yeah,
and we
pretty
have
much.
that in our locker room.
Yeah, as we have seen.
Yeah, so one of the things we talk about, and Andy Reid leads this, and it's a cultural thing, is we're going to respect each other. We can have different opinions. We come from different backgrounds. We have different beliefs, but we're going to respect each other. And that's how we're going to go forward. And, you know, these same guys are fighting side by side on Sunday afternoon for the ultimate goal of winning a game. So you have to have that culture and that respect and that support.
I just can't even imagine the increase in value of your franchise in the last couple of years. Kansas City, I love the town jazz and barbecue and everything else, but it's not a New York market in terms of valuation. But are you up near the top now after 3 straight Super Bowls?
Yeah, we're pretty proud of the run we've been on. We talked about it back in 2009 and 10. You know, we were 4-12 and 2-14, and not real successful as a football team, and frankly, okay as a business operation. And we talked about preparing for success. So on the business side, it was how do we prepare and get ready for when this team actually excels on the field. And it's great to sit here and talk about it now because the strategy worked. When Andy came in, when we turned this thing around with Alex Smith and then with Patrick and then with Kelsey and Chris Jones, and the success we've had has been exponential growth on the business side because we were ready for it. We prepared for that. And now we're at the point of trying to maximize this special time we're in. When we think about this, we're on Squawk Box talking about a Hallmark movie that's going to premiere on November 30th. We've been in 4 of the last 5 Super Bowls. We got to take advantage of this opportunity, and that's what we're doing.
Well, that's what I was going to ask, though. Do you look at these things as cycles? You talked about this sort of special moment.
Yeah.
And how you actually keep the special moment going, right?
Yeah.
Joe was mentioning, like there's only one way. There's only one way from here, which is down. You get to the top of the mountain, you got to ski down at some point. And so how do you even think about that? How do you think about that in terms of valuations? Because we were just showing a whole number of teams, by the way, with great valuations, some of whom had their special moments, by the way, years ago.
Yeah.
And then they have to actually rebuild themselves.
Yeah, I think the cyclical point's a really good one. It is the structure of the NFL. I think it's the best structure in sports, but it's also the most challenging because parity is important. And it's set up so that next season's going to be harder the more successful you are from a schedule standpoint. It's also tough to keep these teams together with the way the contracts work. So we look at that every day. We have a goal of consistently competing for championships. And sometimes that's making hard decisions. Brett Veach and Andy Reid and Clark Hunt have to decide what to do with players at the end of contracts. Who do we renew? Who do we not renew? And those are difficult decisions for them and for our fan base to accept. But our goal is to consistently compete. We've been able to do that.
The expectations. Love the Raiders, Chiefs. Now it's the Bills, Chiefs. Don't you think? Is that? I hope the Raiders are back because there's something about Chiefs and the Raiders, wasn't there?
It's traditional,
black uniforms,
classic.
and there's just
but if you look at this last game, I think we came out today with the ratings. You know, this is the highest rated regular season game. It's a statement to the value of the NFL.
I will say they had, at one point they had one job, and that was to keep an eye on Josh, and they did not. It's like there's no one around him. Do you remember? Did you call Andy Reid and say what?
Yeah. One of the things I learned early on is these guys are elite players, and they were. And Josh is as well.
You can't. The legs on that man.
He's a great player, and he's playing great. We look forward to seeing them again.
Yeah, you do.
Yeah.
Is that a promise?
It's not a promise. It's a hope. I mean, we want to be getting the playoffs.
I think you will too. I think it's great. All right, Mark. Cool. Thank you.
Nice to see you.
That is Squawk Pod for today. Thank you, as always, for listening. Squawk Box is hosted by Joe Kernen, Becky Quick, and Andrew Ross Sorkin. You can tune in weekday mornings on CNBC at 6 Eastern and get the best of our TV show right into your ears when you follow Squawk Pod, wherever you get your podcasts. That's it. Have a great day, and we'll meet you right back here tomorrow.
We are clear. Thanks, guys.